Helix was designed to do the opposite of what everybody else is doing. I wanted to be different. I wanted to be unique. There's a lot of the same techniques that I've used in the past, but we're doing some new things that I think are very innovative. We're partnering with the right people, the right partners, and to build that right ecosystem using some of the philosophies that I've learned within Health Rosetta and then enhancing that.
Hey folks, welcome for another episode of the Healthy Savings Podcast. I'm Sasha Griboff, I'm your host. I'm the co-founder of Milu, and I'm here with Adam Zebian, who's the partner and owner of Helix Insurance Advisors. Adam, thanks for hopping on and being here.
Thank you for having me, Sasha. Appreciate it.
We're filming this right after Memorial Day weekend. The weather's nice, summer's coming. This will probably come out a month or two after the fact, but I feel like we can bring some good weather juju into talking about health insurance and employer-sponsored healthcare and all the sunny, happy things that are in our space on a daily basis.
Absolutely.
I love to start these just by hearing a little bit about you and your background, where you came from, how you got into the health insurance world, how you got into the healthcare world, and what kinds of things you've done in the past.
Yeah, so thanks for having me again. And my history is, 20 years plus now in the insurance industry. I started out as a financial advisor. I followed in my father's footsteps. He was a financial advisor here locally in Massachusetts and New England for 45 years. And I feel like I've been, reviewing insurance contracts and talking about insurance pretty much my whole life. And so that wasn't always the case. Plan A was play baseball. And then plan B was I'll figure it out. But in early 2002, I got into the insurance industry. I was fully licensed coming out of college and spent the first 4 years of my life working at Mass Mutual and then learning the business and learning from my father and other mentors. And my business just naturally evolved into the healthcare space. I got involved in healthcare probably in early 2003. I came across a self-insured client and I had no idea what I was doing, and it took me 3 years to acquire that client. And then after that, it was, really just kind of deciphering the healthcare space and learning how to navigate it and teaching others how to do it. So the first 8 years I spent, as a financial advisor, dabbling in kind of a little bit of everything, life insurance, investments. And then I shifted my focus. I really wanted to be in the benefits world primarily and focus on that. And so I was recruited to be, a sales executive for a third-party administrator here locally in Springfield. And that's kind of where things kind of took off as far as changing my career path and really learning and understanding how the healthcare system works. And so that experience of being on that side of the house, outside of the brokerage world, really taught me, how insurance carriers think, how the underwriting process works, learning and how to build and develop a plan from the ground up. And so really understanding that helped me further my experience as a broker and being able to decipher all the different intricacies of how a health plan works and learning how brokers think and how they operate, whether you're a small boutique shop all the way up to the large, much bigger, top 10 brokerages. And so I had that experience working with the larger brokerages and working in, smaller. And here I am today, working for myself again, which has been a blessing. Working for myself is rewarding, and it's a struggle and it's a grind, but, I don't see myself working for anybody else ever again.
So you had a self-insured group way back in 2003?
Yeah, I came across this client. He was a family friend of ours, and they had been self-insured, and they were a manufacturer with about 100 employees, and they were working with us, looking at different alternative options. They were with a TPA. We started seeing things happening with the administrator not being very transparent. They were hiding fees. They were taking rebates, even back then, which is kind of crazy because we didn't even know that was a thing I didn't know that was a thing until 2009, 2010. But there was a lot of hidden fees, a lot of things that were not disclosed to the employer, and we uncovered those things one by one. And a lot of this came from the broker and the broker's relationship with that TPA. And so we created a much clearer path, and we just created a different contract that didn't have any of those intricacies in that plan. And so I gained their trust. It took me a while because at that time I didn't know anything about self-funding. All I knew was Blue Cross Blue Shield and Health New England, which is a local HMO PPO here. And for small businesses, that was a good solution. We didn't have high deductible plans like we did today. Just getting really into the weeds of how stop loss works, their contracts, learning about their pharmacy contract and understanding, okay, how are claims being processed? Are they being processed in a timely manner? What's the customer service like? I mean, that was a big thing. It's just responding to people. And it's not just a plan that you can put on autopilot. Self-funded plans have never been that way. So I think there was a lot of things that we needed to do just to be much more in front of the client and be, just very upfront and full disclosure. And that's how I won the business. And from that point on, it just continued from there. And that client is still with that third party administrator today.
That's awesome. And then what was your experience like in the TPA world? Like, it's not. I think it's a pretty rare experience for someone who's a broker or running an agency to also have been on that side of the house.
The first and foremost thing, we were a very independent, privately held TPA. And at that time, right about a year into it, we were purchased by Berkshire Hathaway. And at that time, we had just started leveraging Cigna's network and being able to rent out a national PPO like that, rather than kind of a second tier PHCS multi-plan at the time or Great West Healthcare. It wasn't fully integrated. And so at that time, working for an independent TPA, I felt meant something. It was different than any of the publicly traded ones or some of the larger entities that were carrier owned. And so I think that we had a very competitive advantage. We were way less expensive from an administrative cost. We were able to do things on the PBM side that others weren't. We weren't taking any extra rebates. We weren't even messing with rebates. We were full pass through at that time. And so, but I learned, okay, what does it take to actually build a health plan? What are the systems that you need in place? What's the implementation like? What's the education and communication? Because that's completely different than just plugging and playing a state and federal plan, cookie cutter off the shelf. We were doing a lot of customization back then where we were playing with copays and deductibles and those kinds of things. And so, being independent meant a lot. And I saw how nimble we were in the market and how we were able to win. But we were doing a lot of quoting at the time, right? So we were doing, hundreds of quotes a year, right? And capturing maybe 5 to 10% of that. And I was like, there's got to be a better way for this to work. And I saw that, we were losing business to larger TPAs that, just were working with those larger brokers, had preferred contracts with them. And, we were the little guy. And so I had to learn how to pivot and look at it being, if we're more nimble and more independent, we have more flexibility. And we did. And I think that was the biggest advantage. And I use that same philosophy today. You don't need all that big overhead and all that, the big name brands to make it work. We were still able to save clients 20, 30% just in taxes, fees, and just all the excess garbage you don't need in a health plan. And so I use those same philosophies today. That's what helped me, I think, tremendously, especially learning about stop loss and how things are priced in a health plan, and really break it down and itemize it and say, okay, this is what you need. This is what it's going to cost. And it's plain vanilla. It's really not that complicated. And we can rent and lease and outsource a lot of this stuff that we don't do in-house necessarily, that other TPAs say they do, but they can't execute it well. That's the hard part, right? It's like everybody does all the same stuff, but if you don't execute it well, who cares?
And what are you building now at Helix? Like what's your focus, and what kinds of employers are you geared towards?
So we are 100% fee-based. We only work with employers on a fee basis only. We don't take any outside commissions. So that doesn't sway me or create any bias towards any insurance company or carrier. We don't take any stop loss revenue. We don't take any of that. Everything we do is full disclosure. When I joined Health Rosetta and I rejoined Health Rosetta over the last few months, my philosophy is if you're not disclosing your fees, I don't care if you're commission based or not, it really doesn't matter to me. But I choose to take that path where my fees are fully disclosed and I take direct compensation from the employer. So that's number one. So we're independent. We're not owned by anybody. It's not private equity. And I decided to build Helix from the ground up the way I want it, the way I want it built, which is fully, like I said, full disclosure. We typically only work with groups that are in that 5 to 10 and above. I don't work with sole proprietors or anything like that, but We can work with groups down to 5, 10 lives and self-insure groups into more unique models and alternative funding strategies. That's our our biggest thing. My biggest, I would say, advantage is that I have a lot of experience in conversions and helping groups convert out of and transition to a self-funded plan with little to no risk, with relatively the same benefits, if not better benefits. We do a lot in reference pricing. We do a lot in really just more transformative, more high performance health plans. Helix was designed to do the opposite of what everybody else is doing. I wanted to be different. I wanted to be unique. There's a lot of the same techniques that I've used in the past, but we're doing some new things that I think are very innovative. We're partnering with the right people, the right partners, and to build that right ecosystem using some of the philosophies that I've learned within Health Rosetta and then enhancing that. And just using the same partners that I have very good relationships with that can help create a plan that works in synergy, right? You can't just take a bunch of different vendors, put them in place, and think it's going to work. It doesn't work like that. Our TPAs, our PBMs, medical management, telemedicine, all of that has to be fully encased in a very, very tight shell. I think we've done a very good job of that, even bringing it downstream, even to the smaller groups of 10, 15, 20 lives, which a lot of brokers, I think, are neglecting. I've always been a fiduciary. Helix is a fiduciary to their clients. We have an agreement for that, and I'm always trying to find the best possible solutions I can.
Just out of interest, are most advisors fiduciaries, or is that kind of rare? I
think it's
haven't
kind of
heard
rare.
that before.
I think it's pretty rare. I think there's a big difference between brokers and advisors. As a certified advisor and a health value advisor, I think I've done the legwork and I've done a lot of the consulting that I do is in pure form and contract by contract, and so I do have a responsibility to the client. I do have a responsibility to be that advocate, and so I don't think a lot of brokers do that, and especially the large brokerages.
I love the idea that you're saying, "Hey, the current's going this way. I'm swimming upstream. I'm going there," and I'm sure it also
I
makes your
think
life harder.
I think part of it is like I said, there's a lot of focus in that 50 plus market, even 100 plus market, right? I think that any employer can do things that are innovative and that are challenging or that are different or against the grain. I had a conversation last week with an employer with 10 employees on it, maybe 20 subscribers total. Nobody wants to touch that or in a self-funded model unless you're going to a very conservative, level funded, prearranged product. Nobody's customizing that. I do. I've been doing that. I unbundle all the pieces, but then bring it back together into one harmonized cell. I think the difference is what I am doing and how I'm leading those employers down a path that is showing them a different trajectory and how they can reduce that cost curve, right? Because I don't care what anybody says. If they're not thinking about cost when it comes to healthcare, it's probably not a client I want to even work with. But I think one of the biggest things is don't be afraid to go and pay cash for things. Don't be afraid to do the opposite of what you've been taught for the last 20, 30 years. And I think that's a big reason why we've had some early success in working with employers that are even smaller that are just getting crushed by these crazy renewals, 20, 30%. And I'm like, how are you going to deal with that? How are you going to tell your employees that they're going to get a 20, 30% increase out of their paycheck? So I think one of the biggest ways that I've helped employers is I'm going downstream. I'm not just working in the 50 or 100 plus market where a lot of brokers like to play. That's where a lot of the big businesses. Doesn't mean I can't work in that market. I've got a number of prospects that I'm working in that 25 to, let's say, 500 space. And I think a lot of those employers that are still fully insured are now looking at those alternatives.
And how do you self-fund a group that's that small and that, let's say they're 10 employees? Is it that you just make sure that stop loss covers to a lower number?
Yeah, I think a lot of it has to do with you got to get to know the employer, right? Understand where they are today, right? If they understand that there's a significant problem, or if they're willing to act on that problem, whether it's cost, whether it's service, whether it's the benefit design isn't working for them, a number of those things. So you got to get into the weeds a little bit and understand the group, understand the business. And I think the next thing is to pivot. Okay, if you're looking at alternatives, what are the alternatives? maybe self-funded is the best option you have on the table, because all the other fully insured options are either ridiculously high, like your renewal, or you're just willing to accept that path of, okay, I have to cost shift a lot of this to the employees. I don't believe in that strategy. But I think one of the things that we do is, like, we have to do a cost analysis. We do a little bit of benchmarking, like, where do they sit today? And then, okay, let's figure out a plan. And this isn't something that happens overnight. We may have to do medical questionnaires and go back to our roots and figure out any different ways of underwriting that group as possible. So using AI technology, using good old fashioned questionnaires, whatever we have to do to figure out, okay, what's the problem and what's hindering us from either moving forward to a self-funded design, or what's hindering us from keeping our costs down and giving better benefits out to our employees. And so I have to figure that out. And a lot of times some employers don't even know what's going on. There's a lot of health plans even locally here that don't exist anymore. They're now been consolidated. So there's not as many options, right? So that's one of the things we try to uncover is, let's figure out some alternative options that are not in the traditional sense, but being able to navigate through that once you do make that decision.
Like if you have a group of 10 people and someone's on an expensive medication, how does that play out? Like, is the answer sometimes, hey, it really would be crazy this year to go self-funded, like you should stick with your Blue Cross plan? Or is it usually, hey, there's something else that like no one's told you about, but there's a path we could go down?
Yeah, I think that that conversation to me is a fairly easy one, because if we know what the problem is, if we've identified the problem, whether that's medical questionnaires or using AI tech, whatever underwriting means we can, and we know that somebody's taking a medication that's costing X amount of dollars, tens of thousands. In any kind of traditional plan, you have no option. Either that drug is covered on the formulary or it's not. And if it's not, great, then we can find ways of getting access to that drug, that patient, that medication for either zero cost or very little cost. And the employer can fund it. If the drug is, usually what we do is we carve out most of those specialty drugs. And we tap into all of those programs, whether it's manufacturer's assistance and patient assistance, or we have manufacturing coupons. But one of the biggest ways is usually if a person doesn't qualify for whatever reason financially, we source that that medication internationally and through personal importation. So having a very good specialty partner, a specialty pharmacy that helps navigate a patient through that does the outreach, walks the patient through, literally white glove service, and just walk them through that whole process, making sure that the patient is not out that medication, any life-saving medication, or even what about the generics, right? So if somebody's taking diabetes medications, we have zero cost, zero out-of-pocket programs that we put in place that are built right in. Mail order programs that we build in for zero out-of-pocket costs to the plan member. The employer pays set dollar fixed costs, so a per employee cost plus type of arrangement, where even if we're in a level funded style type of program, the employer is getting 100% of any of the surplus back. They get any of the surplus revenue from any of the rebates. We provide a very transparent program. They probably don't even have, a lot of times, they don't see all the different mechanisms that are happening behind the scenes, but we know what the cost is. Having that ability to just pay for care as you need it, or pay for care over time, and create that cash flow and keep that money in the employer's pocket rather than giving it to an insurance company.
Are most of your groups in the Massachusetts, New England area?
Yeah, most are in Mass and New England. I have clients in Mass, Connecticut, New Hampshire, Vermont, Rhode Island, but mostly the Northeast. We're primarily focused in the Northeast.
And what are the health systems like in the Northeast? Like I know Boston is full of, academic medical centers, but like is it a competitive market? Are there some parts of the Northeast where it's like very uncompetitive?
Yeah, so it's interesting. Everybody's after, chasing rates, right? So we have a few markets, but Blue Cross is certainly the predominant market here in the Northeast. Doesn't matter if you're in Massachusetts and you're part of Blue Cross of Mass. If you're in New Hampshire or Connecticut, it's Anthem Blue Cross. But some of those markets, like in New Hampshire, you only have two markets. You only have two options. You have Harvard Pilgrim or Blue Cross Blue Shield. Sometimes you have Cigna and Blue Cross. But in Massachusetts specifically, there was three health plans that are now part of one conglomerate. So Point 32 Health which is now Harvard Pilgrim, Tufts, and Health New England now. Health New England was part of Bay State Medical Facility, the Bay State Health System. They sold not only their labs to LabCorp, but they recently sold the health plan. So those three are now part of one group. And so again, the consolidation's happening, which I don't think is ever a good thing in healthcare to reduce cost. When it becomes, renewal time, what we're seeing is high double-digit increases across the board. I don't care if you're with Blues. I don't care if you're with Harvard Pilgrim. I don't care if you're with Tufts. The new Brigham Health Plan out in the eastern part of the state, we're seeing high double-digit increases year over year.
And then is there a good opportunity for patient choice on facilities you go to? Like, are there a bunch of independent surgery centers? Are there
There's a
independent
few.
practices?
It's over the years that I've been doing some direct contracting and using RBP plans and RBP strategy. We pull these different levers, right? We talk about cash pay. So paying things for in cash is usually the first and foremost way or path that we find access to healthcare. Or we have a direct contract. So there's a gentleman that I work closely with that is formulating a more direct healthcare network, more of a consolidated network here in the Northeast. There's two in Western Mass that I use. There's certainly more out in the Boston area, but we send patients where we need to send them, right? And so getting the best quality care should never, we should never be hindering a patient from getting access to care. And so we've seen that RBP does work. We've seen that we've had a lot of success with it with very low balance bill rate. And even the balance bills that we have are usually settled within a few months at the latest. What I find is most providers don't understand what most of my employers either have or what the employee is actually handing to the person behind the desk, right? And so a lot of these plans have provider networks. Our plans typically don't. We don't use any networks whatsoever. We run straight RBP. We utilize cash. We pull the levers that we can, or direct contracts on the medical side. And then on the pharmacy side, patient assistance, international sourcing, and then domestic sourcing, even just a lower cost, even from a domestic source pharmacy. So using all those levers, using all those triggers, but having the right medical management partner behind it, that's the key. So
that's awesome. How does the cash pay piece work? I'm interested because we also believe that that's a huge part of the answer. Is it all through steerage and medical management, or does the patient show up and have a debit card of some sort?
It could be both. If we've identified a provider or let's say an oncologist or an orthopedist that is willing and able to accept cash as a form of payment, which they should, a lot of times it falls on the medical management partner that's helping steer that. But then we do use a vendor that we utilize cash pay, where an employee could usually pay with a debit card or a credit card at the point of sale. And so that helps with the disruption of, okay, well, I need to pay. How am I going to pay for this? How's the patient going to pay? Well, it's really not the patient. It's really the employer giving the employee the card to use at the time of sale.
Yeah.
Because if we're going to do a cash pay arrangement, we want to get that better price, and we want to pay that in a timely fashion so that there's no balance bill issues or anything like that, and that form of payment is said and done. And so using that debit card as an example, patients can pay right at the point of sale, and they won't have to worry about it ever again. They'll never see a bill. They won't see an EOB. They'll see an EOB, but they won't see a bill.
What are you focused on in kind of the coming 6 months? Is it spreading the word about Helix and what you guys are doing? Is it onboarding some new groups?
One of the things that we focused on early was I was very, very active about getting my clients back. Right. So when I left my brokerage and came back to it, I didn't have any non-competes or non-solicit that I had to worry about. So some of those clients have come back to me. Some of them are just going to be long gone and there's nothing really I can do. They're under new ownership, et cetera. So getting those clients back. But going forward, we're heavily marketing. We rebuilt the website. We've established some different marketing pieces that we've used. We've got some tools that we're trying to build that Helix brand. And I'm doing a lot of networking on my own and just word of mouth. I'm involved in a number of different networking groups, BNI, Western New England, Provisors. I'm involved in another closers group. And so a lot of that, I'm just trying to keep it local for now. But On top of that, we've got some software tools that are doing outreach to a number of employers throughout the Northeast, any state that I'm licensed in, pretty much. And so there's a lot of activity there. But the idea is to grow, but not to grow too fast. I don't think that would be a good thing. And gradually, eventually, I'll bring on some new people, I would say, over the next 2 years.
And what's the profile of employer that should call you? Like if I'm a CFO or an owner of a group, like what's the thing that should be true about me to say, hey, I should really call up Adam and Helix?
Yeah, I think there's a couple of things. Number one, if you're struggling with the rising cost of healthcare and you're sick and tired of getting those renewals year over year, that's a good time to engage with us. Secondly, I think a lot of times they're not getting the service from the broker, right? I think most employers don't realize how much they're compensating their broker indirectly. And I think sometimes that's an issue. The other issue is a lot of times if you're in that 50 to 99 space and you're kind of hovering in that ACA world, if you're going from that small group to mid-market, what would be designated as mid-market, into that ACA realm, and you need to be compliant. So we have a lot of compliance resources and just other tools and resources that are available for employers of that size. But any employer in manufacturing, distribution, even nonprofits, anybody that is looking to change the way that they approach healthcare, those are always great prospects for me.
Well, Adam, thanks for being on the podcast. Great to speak with you again, and best of luck with everything.
Thank you.
Thanks for listening to Healthy Savings by Milu Health. If you would like more information about any of the topics you have heard today, we would love for you to get in contact with us. Find us on the web at miluhealth.com.